Okay, let's take a look at the S&P 500. This is a weekly chart of the S&P 500. Back in December 2016, we have a rate hike of 0.25%, and there was establishment of the high and low for the week. The bears have managed to close below that range, but did not manage to have follow through after that week. In the recent week, the bulls have crossed above it and managed to close above it as well. Staying above the 2275 will enable the bulls to have advantage over the bears. Moving forward, this will act as a support for the bulls. Let's take a look at the Dow Jones. This is a weekly chart of the Dow Jones. In the recent week, Dow Jones has broken out of the range, and by staying above the 20,000 level, the bulls will have advantage over the bears. Let's take a look at NASDAQ now. This is a weekly chart of NASDAQ. And back in 2000-2001, from the range of 4,800 and 5,000, this is a tech bubble zone. And this is also the zone that the tech companies have failed. 3 weeks ago, the bulls managed to break above this resistance zone, and they keep charging all the way to create a new high back in the recent week. As long as the bulls stay above the 5,000 level, the bulls will continue to have an advantage over the bears. Next, let's take a look at the Russell 2000. Okay, this is a weekly chart of the Russell 2000. In the previous support and resistance level of 1260 and 1150, sometime in November 2016, the bulls managed to break above this resistance zone. But however, in the last 8 weeks, the bulls did not manage to do any new highs, despite S&P 500 and the Dow Jones making new highs. So the bulls need to prove themselves again in the Russell 2000. Next, let's take a look at the VIX. Back in July 2015, we have a very low reading of the VIX, which means that the market is very complacent. And in August 2015, we have a market crash. Back in August 2016, we have another low reading of the VIX. And the market had a drop back in September, just 1 month after the low reading in August. Now, in January 2017, once again we have extreme reading in the VIX. So, there could be a possibility of selling in the coming weeks. So, for the longs, please take note and trade accordingly. So, what's happening to the bonds? The support at $120 level gave the bulls good support back in October 2016 and creates a rally up to a level of $145. Follow which there's a pullback by the bears, and now the value is just slightly below $120. This is the support level that the bulls are looking for, and failure to move up this level will give some trouble back to the bulls and give control to the bears. Next, let's take a look at the Japanese yen. Previously, the $80 to the $82 level are acting as resistance to the bulls. And in early 2016, the bulls managed to cross this resistance level and have a rally up to the $96 level. Following that, the bears pushed the price down to the $82 level again. And the bulls managed to use this $82 to bounce the value up a little bit. So in order for the bulls to move higher, the $82 level must stay. And the price must never break the $80 level, otherwise the bears will take over the control of the Japanese yen. Next, we take a look at the US dollar. Back in the first quarter of 2016, the dollar got resisted at the $100 level and got sold off all the way down to a $92 level. Now, back in the last quarter of 2016, the bulls managed to cross the $100 level and managed to push it higher. However, in the recent week, the bulls have retested the $100 level again. And this $100 level is very critical for the bulls as it's now currently acting as support. And the bulls need to bounce off this $100 level in order to go higher. Failure to do so may create trouble for the bulls, and the bears may push the prices down lower. That's all I have for you today. Thank you for your time. See you next week. Bye.